Hello everyone, welcome back to my channel once again. In this video, I'm going to show you guys how you can possibly grow your little capital in forex trading, crypto trading, or synthetic, whatever you are trading. You can easily use this strategy and knowledge to grow your little capital. First of all, here we're going to talk about risk management, because applying proper risk management in your trading enhances your trading and makes you to take a good decision while placing your trade. For example, when you're having a $100 account, you understand risk management, you won't be able to expose all your capital. Now, I'm not going to show you, I'm not teaching you how you can flip your trading capital. I'm teaching you how you can possibly grow your trading capital gradually. So I'm not teaching you how you can flip $100 account to $500 or $1,000 in just 24 hours. I'm going to show you guys how you can grow at least a $100 account to $500 account in a short period of time for at least 1 to 2 weeks. You can grow your $100 account from $100 to $500 or $1,000 in a period of 2 weeks by using this simple strategy and understanding that I'm going to impart on you guys today. So, for example, if you're trading a $100 account, all you need is not to expose all your capital in a single trade. Now you can decide to risk 20% of your trading account, which means you are risking $20 per trade. The $20 per trade can easily give you at least you can easily place a trade of 1 to 3 risk reward ratio, which means you can use $20 to gain $60 or $40 in a row. So for example, if you're risking $20, that means you have a chance to place at least 5 trade with your $100 account. And mind you, you have to make sure that to not be discouraged, that you have to make sure that in your first, second, third trade, or let's say in your first and second trade, you will be on the winning side. So you have to apply all trading tools like your Fibonacci, support and resistance, your trend line. You have to make sure everything is in play before placing a trade. You have to understand the chart pattern too. You have to understand how chart pattern works in order to not fall victim of losing your first and your second trade. You have to understand how to trade the trend and not to involve yourself in a consolidating market. You have to trade only the trend and not a consolidating market. Even high traders doesn't trade consolidating markets. They only trade the trend, then chart pattern. So if you look closely in Euro USD, you can see a clear double bottom right here forming on the daily time frame. A clear double bottom forming on the daily time frame, but we are not yet sure of the break of this neckline. I know there is some candle close above the neckline, but that is not a clear confirmation for me to jump into the trade right now. I'm going to wait for this chart pattern to be fully complete, then I can possibly place a trade. I'm sitting here with a $50 account, and I'm going to trade this $50 account to at least 250 by next week. So I don't like being in a hurry in any of my trades, so This is how I do my things. I'm going to wait for this simple confirmation in this double bottom right here. I'm going to wait. If possible, I can see something like this, a pull, a move to the upside, then a pull back. Then I can possibly take my entry right at the pullback here, which will move this market back to the upside, to this yellow bar at least. And this is my concept, double bottom. This is what I'm looking to do it in coming days or weeks in Euro USD. Now, if this doesn't happen, now you can ask yourself, what then invalidates this setup that I'm placing right here? Now, what invalidates this setup is when I see that this neckline is not fully broken and retested as I am expecting. Now, if the neckline is still not broken and retested, I'm not going to place a trade yet. I just have to allow the market to do its own thing and give me the confirmation I'm looking for before I can possibly place a buy on Euro USD next week. Now, secondly, you have to understand that this market is still on Fibonacci level. This market is still on Fibonacci level. Now, let me use my Fibonacci to show you guys what I'm saying here. Now, you can draw your Fibonacci from the swing high to the swing low. You can see clearly that this market is still on Fibonacci level right here. Now, if I can see a clear break to the upside and a retest, as I said earlier, then I'm going to rally this trade back to the upside, to this yellow bar. Now, another reason why I'm still looking at this trade is that I want this market to break this resistance level right here and then turn it to support by giving me a push to the upside and then a pullback to the previous resistance level, which means my resistance level now turned to support right here. Then I can possibly take a trade, and before taking the trade I have to draw my Fibonacci. I have to draw my Fibonacci from swing low to the highest point I'm expecting this market to be before I can possibly take the trade. Then after this Fibonacci, then when I'm sure that the Fibonacci is in play, I can easily draw my trend line. Now you have to make sure that all these concepts are in play first before taking a trade. If you are growing your small capital, you have to make sure that your trend line, Fibonacci, support and resistance are in play before you can take a trade. Now we have discussed some few steps right now. We have discussed your trend line, Fibonacci, support and resistance. Your risk management, which is the most important one for this video. Your risk management matters a lot. If you're having a $100 account, you don't have to expose everything, because this is not how you can flip your trading account once. This is how you can grow it gradually from grass to grace. So you have to ensure that you are risking at least 10% of your account, or at least 20% of your account in each trade. Now, if you're risking 20% of your account before this market gets to this yellow bar right here, you will be in this market would get to this yellow bar, you'll be in a good profit. Now, secondly, you don't have to trade with fear. That is why it's not advisable to put all your money into forex trading. Because if you put all your capital, everything you have in your home into forex trading, then that comes with gambling aspect of it. Then you would see forex trading as a get rich quick something, and that comes with your emotion into the market. Now you don't have to put everything you have in your home, every capital you have in your house into forex trading if you want to be stabilized in trading. That's why it's good to at least have something doing, have a work you are doing that gives you some money in order to win forex trading. All that matters in forex trading is the psychological aspect of it. Now, putting your emotions in forex trading will not determine your win. For example, when you put your emotion in forex trading and let's say you place a trade and you lost, let's say you have $100 account and you place your first trade and you lost the trade, then the emotion now comes in the market that maybe you're going to lose the second trade or the third one. Maybe, or maybe you can even keep losing. So you have to get yourself a job or have something doing. Do not always depend on forex trading as a new trader or as a beginner. You don't have to depend on forex trading in everything you do. You don't have to see forex trading as an option or as a way to escape poverty if this is your first time of trading, or if you are not yet successful in trading. You don't have to see forex trading as an option yet. You have to get yourself a job in order you don't have to see forex trading as an option yet to escape poverty. You have to get yourself a job first, or make sure something else is giving you some money in order for you to be stabilized in forex trading. Now, if I'm earning $200 per month and then I decide to put $100 in my trading account, I guess that is not a wrong decision. If I'm earning $200 and I put $100 or $50 in my trading account to grow, I guess that is not a wrong decision. But if I'm earning $200 account and I decide to put everything in forex trading, that is the gambling aspect of it, and you will never make anything out of the market because of your emotion. You will be emotionally attached to every single trade you place. So you don't have to put all your money into forex trading because that is the gambling aspect of it. And please, if this is your first time of coming across to my channel, do me a favor to subscribe and turn on the notification bell so that whenever I drop a video like this, you'll be the first person to get notified. I guess in my next video I'll be covering some top-down analysis on Euro USD, GBP USD, and DXY. So have a wonderful day and remember to subscribe to this YouTube channel. Subscribe to this YouTube channel and turn on the notification bell.